I know this is going to sound crazy, but shorts are starting to cover today in a pretty big way. Now, whether or not this evolves into an explosive short squeeze into the rest of this week and the start of 2025, I don't know. And actually, I hope it doesn't happen, although I think there's probably a good chance that it does happen. I hope Tesla stock crashes and burns. And I know that sounds crazy. That's just because I'm bullish and I want to buy as many shares as possible. So if I'm wrong, or in the event that I am wrong and Tesla does come down, it does not go up as I think it will, I think that is a massive opportunity for 2025. And here in this video, I will explain why I'm so bullish on not just the end of this year, which again, I hope I'm wrong. I hope we get a chance to buy Tesla at cheaper levels, but why I'm so bullish into 2025. Why I think that any opportunity you get to buy Tesla at lower levels should be taken. Again, I'm not a financial advisor. I'm not a financial planner. I don't know your personal situation, but generally speaking, I think Tesla is going much higher into 2025. And again, there's a good chance Tesla is going way higher into year end as well. First and foremost, I just want to say the markets are extremely washed out and oversold, okay? You could look at the RSP, which I think is something that's way better to look at, honestly, than the S&P. The RSP from its high that you set on November 29th until today is still down 6.5%. From the low that you had on December 20th, the RSP was down about 8% or so. That's pretty close to a correction. Okay, so the S&P is not down nearly as much. Okay, the S&P from its all-time high is down roughly 2.5% right now. At the lowest level, it was down about 4.5%. That's like half of the RSP. But internally in our markets, you've seen a lot of fear. You've seen a lot of selling come into markets thus far. And the reason it really looks like we could have a strong Santa Claus rally and the start of 2025 is because you've gotten this correction in the internals of our markets. And we really don't have too much as far as economic data this week. And even in the first week of January, there's just not much that I think is going to move the markets. Today, we had durable goods orders month over month that came in at negative 1.1%. That was worse than expected. Last month was revised up a lot, though, from 0.2% up to positive 0.8%. So factoring that in, durable goods orders was kind of in line with expectations in a weird way. The consensus was negative 0.4%. But again, that upwards revision from last month, comparing that on a month over month basis, well, it makes the negative 1.1% look not as bad. Okay. Now, we did also get CB consumer confidence that came in at 104.7. The estimate was 113. So that came in lower than expected. I think part of that has to do with the stock market and the pretty much crash you've seen in December for the internals of our markets. Now, tomorrow is going to be a half day for markets. We will get Richmond Fed Manufacturing Index, Richmond Fed shipments, or manufacturing shipments, and Richmond Fed services revenues. And that's it. On Wednesday, markets are closed. On Thursday, you have a full day of trading and you get initial jobless claims. That's really the big catalyst. And then on Friday, you really don't have much at all. Goods trades balance, as well as the S&P Case-Shiller home price month over month and year over year. But there's just really not much as far as catalyst this week and even in the start of January. And with a lack of catalyst in the seasonally best 2-week period for the year, which is December 15th through the 31st, which also the first couple of days of January tend to be good with the January effect. I see it as most likely the markets move higher throughout this period. Again, I hope that does not happen. I hope Tesla stock falls into year end because I think 2025 is going to be a great year and I want to load up on Tesla. Preferably in the high 300s would be cool, around 350 would be cool, but I'm not confident that we're going to fall to those levels, especially considering the amount of shorts covering today. We kind of hit that one on the head. Now, does it evolve into a full-blown short squeeze? I do not know. Okay, I think it's likely that it does, but we don't know that for certain. Now, today, you had 3 million shares that were covered today. Okay, now that is helping Tesla to move up 2%. The option activity was not as strong today, and I think that just has to do with the overall negative sentiment we have in markets. As I reported in the last video, there are firms talking about the Fed raising rates next year. They're giving it like a 40-50% chance that the Fed is actually going to start raising rates next year. That is really helping to kill any potential bullish sentiment that we may have seen today. But as really I've talked about over the last couple of weeks, it makes sense for short sellers to go out and cover on their short positions in the year of 2024, right? To not take that short position into another strong year for Tesla, which is going to be 2025, to lock in that loss in 2024, to use that as kind of a tax loss harvest and get out of that short position at the same time. So it looks like that is actually taking place. Now, again, whether or not we see a short squeeze, I don't think that matters as much as what short sellers covering is actually telling you. Short sellers covering on their short positions is literally telling you they're not bearish on Tesla anymore, okay? Or they're not nearly as bearish as they were previously, which is ultimately a good sign. Now, here you can see the Santa Claus rally, which even JP Morgan said today that with, again, the lack of catalyst we really have this week, the seasonally bullish, momentum that we tend to have during this stretch of the year, we could still see a Santa Claus rally. And Ryan Dietrich does great work on this. I talked about this chart in the last video, but I just want to reiterate it here in this video as well. From December 15th through December 31st, S&P tends to rise about 1.5%. Okay, we're down like 2% from December 15th. So that would imply maybe a very strong, end of this week. Maybe this year we don't get a Santa Claus rally. But I just think you're so negative that it's not going to take a lot to actually get a rally here. Okay, look at the CNN Fear and Greed Index today. It's sitting at 28, almost an extreme fear, when really not too much has actually changed. Okay, the Fed was a little more hawkish than expected. That's about it. Okay, now I think the expectation that the Fed's going to raise rates next year is crazy. I think we're setting ourselves up for a big upward surprise next year when inflation comes in lower than expected. Okay, I don't think under Trump 2.0 we're going to have an inflation problem. Okay, just 2 weeks ago, people were talking about inflation could actually undershoot 2% at some point in 2025 or 2026. That could be the problem that we're actually faced with, which I guess would be a good problem to have as long as the economy is holding up and doing well. Now, I will also report to you, only 30.83% of stocks are trading above their 50-day moving average. That means 70%, 69, almost 70% of stocks are in an active decline, okay? With the average stock down about 8% from its all-time high. Or from the levels you had just in December. Those are very, very negative numbers. This is typically a good time to be buying stocks, okay? This would put you back to April 2024 levels when you were in a 10% correction. This would take you back to where you were on August 5th of 2024, both of which you were in a 10% correction, okay? As simple as that. Look, let me make this a little bit simpler to actually see. Okay, let me go ahead and do this. Okay, let's blow this sucker up. Okay. Zoom in here. Okay. So right now we're sitting at 30% of stocks trading above their 50-day moving average. In 2024, in April, you hit about 27%. Okay, so you did go a little bit lower, but roughly where we are today. And then August 5th, you were at about 31% of stocks trading above their 50-day moving average. So even in August, when you had the yen carry trade blow up, you had more stocks trading above their 50-day moving average than we have today. What happened from peak to trough from July through August 5th? S&P fell almost exactly 10%. What happened back in April of 2024 as far as an actual percentage decline? S&P fell about 6%. So you are at very negative levels right now. Kind of like correction levels, although big tech has really held up the S&P. Internally, you're very weak right now. And I think that is something a lot of people don't understand. So normally, when you get to these super extremely low levels, it's a good time to be buying. It's not a good time to be selling. And that's why I just have to be bullish over the next couple of weeks. As long as nothing changes and things don't get really bad all of a sudden, it's hard to be negative on this market. Plus, I think it's really hard to be negative on Tesla stock. There's not a lot to be negative on. There's just not heading into 2025. Now, again, just to show you how weak things are, the S&P 500 only has 15.40% of stocks advancing and almost 85% of stocks declining today. That is extremely bad. Okay, that's terrible. Even the NASDAQ, 38.2% advancing, almost 59% declining. I mean, these are really, really, really bad numbers. Okay. Now, it says here, talking about a Santa Claus rally on CNBC. It says, quote, the second half of December is also typically the second strongest period of the year for U.S. equities, and the S&P 500 has been up 83% of the time in December of presidential election years, according to Bank of America. They say, quote, with the market's primary uptrend still intact, we are not giving up on the potential for a Santa Claus to come to Broad and Wall this year. Craig Johnson, chief market technician at Piper Sandler, said in a note today. Another encouraging sign I will say today, 85% of stocks on the S&P are red. And the S&P, is still green. That's because big tech is largely doing well today. But the VIX is actually down almost 1.5% today. So there's actually less fear in the markets today, even though most stocks are declining. What does that mean? It means, well, the situation may not get too much worse from here. People are not super nervous about a pending crash or larger downside. That tends to be a positive divergence. So as I said in the last video, my crazy prediction is Tesla stock could be, obviously not guaranteed to be, but could be $500 per share over the next week or so. Call it the end of this week, first couple of days in January. That is, a pretty wild prediction. That is from here about 16% higher for Tesla stock. Now, as you get more shorts that cover into year end, as you likely start to get a lot of positioning into Tesla into the end of this year and into the start of 2025, because obviously I don't think there's a better stock to own in 2025 than Tesla. And I think a lot of people understand that at this point as well. As long as we don't get any bad news, I mean, Tesla stock has no reason to go lower. there's every reason in the world to go higher, especially if the markets can actually recover a little bit internally. If we can start to get some strength coming into markets again, I think that's really going to help boost Tesla higher. Now, we will talk about this a little bit more over Christmas when the markets are closed, coming on Wednesday, and even over this upcoming weekend. But deliveries come out January 2nd. And if they are as good as what the data is suggesting they could be, you could see another very strong rally after January 2nd. Again, I think Tesla's going to beat estimates for deliveries. I think there's every sign in the world that deliveries are going to be really strong. But trust me, I hope they don't. Again, I hope Tesla falls. I hope Tesla falls into the mid 300s again. I think that's a great level to buy Tesla. I think it right now is a good level to buy Tesla as well. But I think you get more bang for your buck in the mid 300s. Okay, I think Tesla could be a $900 stock next year instead of a double up from here. That would be more like a triple up in the 350s. So it does make a difference. And I don't know. I know some of you guys are going to not like me saying that, but I hope Tesla does fall. I hope I'm wrong. I hope my prediction for large upside is utterly wrong and Tesla crashes instead or falls instead. And I know as long as you're not trading options short term on Tesla, then you probably hope for a fall as well, because then you can buy more shares. But honestly, I don't think I'm going to be I don't think I'm going to get my Christmas wish on that one. I don't think Tesla's going to fall. So I actually think Tesla's going much higher from here. Again, $500 is on the table over the next 7 to 10 days or so. So yeah, that's what I got for you in this video. There's unfortunately, there's a lot of reasons to be bullish on Tesla right now. Let me know what you think about this down below in the comment section. Even the candle that we've seen today, like, look at that. We tested the downside at 415 and then reverted all the way back to the upside by the end of the day. That is typically a pretty strong reversal candle, much the same way as it is to the upside as well. Like on December 18th, when you hit a high and then you flush to the lows and end up closing near the low of the day, that tends to be a negative signal. There's a lot of those candles we can kind of point out over history for Tesla, but whenever you get those long wicks on the downside and then the stock goes up, it tends to be very positive, and seems like that happened today. So let me know what you think about this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.